Hey everyone, and welcome. So today we're diving deep, way deep, inside the financial system to uncover this hidden architecture, the thing that kicks in when everything is about to fall apart. It's a story about a safety net you've probably never heard of. And get this, the incredible database that makes the whole thing run. So picture this. The markets are in a total freefall. Panic is spreading like wildfire. And all the normal ways for banks to get cash have just vanished. They're completely frozen. They need money, and they need it now to stop this massive domino effect. So where do they turn when literally no one else will lend to them? Well, the answer lies in this really crucial financial lifeline. Think of it as an emergency backstop that's built right into the very heart of the economy. These are the moments that really define financial history. It's like the entire system just holds its breath. Banks, even the really healthy ones, can suddenly find themselves completely unable to fund their day-to-day operations. It's called a liquidity crisis, and it demands a super powerful, super fast response. And this is that response. It's called the discount window. This is basically the ultimate lender of last resort. It's a direct, it's secure, and it's a confidential line for banks to borrow money straight from the central bank when every other door has been slammed shut in their face. What's so interesting here is that this whole thing acts like a pressure release valve for the entire financial system. Just the fact that banks know this backstop exists, well, that alone provides this layer of confidence that helps stop the panic from ever getting out of control in the first place. Okay, so how does this emergency lifeline actually work? I mean, what does a bank physically have to do to get its hands on these critical funds? Let's pop the hood and take a look. It really just boils down to three main steps. First, the bank's got to offer up some valuable assets that it owns as collateral. Second, it has to agree to pay whatever interest rate the central bank has set. And finally, number three, it submits its official request. The whole process is designed to be incredibly fast and secure. And this really gets to the heart of what a bank has to bring to the table. We're not talking about just any old asset here. The central bank wants the good stuff. High-quality, super reliable collateral, like government bonds or the absolute best loans. This makes sure the central bank's loan is totally protected, even in the middle of a crisis. Now let's talk about that interest rate, because this is a really crucial detail. The discount rate, it's intentionally set just a little bit higher than the normal rate you'd find on the market. So why would they do that? Well, it's to make sure banks don't just use this as their go-to piggy bank. It's expensive on purpose, which guarantees it's truly a last resort, not a first choice. All right, so we've got the theory down, but let's see how this tool actually performs out in the wild, in the real world, where things get, messy. On paper, this thing is supposed to be this quiet, smooth background utility. It's just there, ready if needed, giving everyone a sense of stability without ever needing to be in the spotlight. But, as we all know, reality is often way more dramatic. In practice, when you see banks starting to borrow heavily from the discount window, it is a massive, flashing red light on the economy's dashboard. We saw usage just skyrocket during the 2008 financial crisis, and we saw it again during the banking chaos of 2023. It's basically a barometer for system-wide stress. And this leads to this really fascinating psychological problem. Even though the window is there to help, a lot of banks are actually terrified to use it. They're worried that if the market finds out they're borrowing, they'll look weak or like they're failing. And that could cause everyone to pull their money out, making the problem 1,000 times worse. Now, this is a really important point. The discount window, as critical as it is just one tool in a much bigger toolkit. Central banks have other methods, like super short-term loans called repos, or currency exchanges known as swap lines, all to pump cash into the system and keep things stable. Each tool is really designed for a very specific kind of problem. So we have all of these complex financial tools, and they all depend on knowing exactly what collateral is good, who's allowed to borrow, and then processing it all in the blink of an eye. But what's the invisible engine that makes this entire system of trust and confidence actually work? And that question, that brings us to the real heart of our story. This isn't about giant vaults filled with cash anymore. It's about this unseen foundation that's running absolutely everything behind the scenes. Because here's the fundamental truth of our modern financial world. Every single piece of this safety net, every loan, every piece of collateral, every credit line, it doesn't exist in a physical vault. It exists as an entry in a massive, incredibly secure,
an unbelievably complex database.
This database is the source of what the source material calls quiet confidence. It does all this silent, vital work. It knows exactly what collateral every bank has. It manages their credit in real time. It processes emergency loan requests in seconds. And it feeds all of that information to regulators. It is the one single source of truth that holds it all together. And really, that's the ultimate takeaway here. The discount window isn't just some place to get a loan. It's a powerful signal about the health of the entire financial system. And that signal, that whole system of trust, is powered by an invisible but absolutely essential data infrastructure. It really makes you wonder, doesn't it, when you think about the flow of electricity to our homes, or global shipping, or logistics. What other massive, fundamental parts of our world are being quietly managed and stabilized by these huge unseen databases? It's definitely something to think about. Thanks for joining me.